Microphone check and screen share check, please. All right, good evening, guys. Kevin Davis Capital. It is a nightly strategy podcast for October 5th, 2022. Pretty good day at work today. So this morning, I get a call from Angus Fletcher looking for advice on how to help his AI startup company give some access to non-accredited investors, because his dad told him that he thinks that not just the fat cats should get rich, but the little people. So he asked me for some advice on that. What I told him was have all the fat cats kick in the $50K for the final piece of the ownership tranche that they're filling, and then commit to whatever that $50K ownership interest is establish a trust to fund microloans at Heifer International and Kiva.org, so that you don't ask non-accredited investors to take an excess risk and save yourself the trouble of lawsuits if it doesn't work, and simplify your administration. Plus, you get to do an awful lot of good work in the world with microloans. So they said, okay, they're going to do that. And then they just had an investment bank that's going to handle their funding, value them at 9 figures. So that's $1 billion potential startup. They're working on an AI strategy to improve the curating of educational, entertainment, and enlightenment material from all sources that would tune itself to your preferences and your values. It's the same model of AI that I was helping him on to let DARPA develop an AI assistant for our field commanders to help them with strategies and tactics and that. So they're bringing me on as a consultant for that company, which is pretty cool. Next week on Monday, I'll be featured on the VTI podcast. And on Tuesday, I have a podcast with Danny Inney of Mirasee, who's in the business of helping people teach their gift. And I've taken his course, and they liked what I was doing. So they're going to interview me for his approximately 500,000 followers. So we'll see how that goes. That should be fun. And then good day at practice today. So here we go. Let's see what's up with the market and see how we're doing. We'll start with the 30-minute chart today. See how that feels. So here's the opening. So there's a bit of a gap down, sells off, and then you get it like a Kata 2 in a 1, 2, 3 opening. Now, what I've noticed is that on the 30-minute chart, the 1, 2, 3 entry is fine. You can get the entry right there. You don't actually have to wait for the PSAR to flip. You can actually get that entry early. Then there was a nice strong finish for the day, and then last second sell off. So it was a micro loss for the day, but still, that feels like a Kata 2. It had a chance to collapse and give back the gains of the 2 days, but it held and closed pretty well. I consider that to be a reasonably positive day after 2 of the best days since 2020. So I'm still optimistic here. On the daily chart, so this is the 30-day look back, 20-day, 10-day. Here's the 5-day. You now see that the 5-day range is as large as the 10-day range, meaning that the 5-day low and the 5-day high is the same as the 10-day low and the 10-day high. So that's a very directional move that closed well. It closed above the PSAR, so the tactical trade is to the upside preference. and should be traded that way intraday when you have chances. I'd be looking at the 1 day low as sort of a return back to the downside. So if that's where the PSAR was, that's also the top of the dragon, spine of the dragon, belly of the dragon. So I would take that as my first hard stop there at about 370, and then the bottom of the dragon at 365. If it were to break through the bottom of the dragon, you have to be short in a large way with a second position if the RL10 breaks. That's where I would add a third position. But to the upside, this looks pretty good. And then if it resumes back above the 10-day high, which was today's high, that's a sign to go long. Then I would say, I think right here, 390 is a nice round number. I would add a position there. And then at the top of the dragon, say at 400, that's a round number. That's going to be strong resistance, I think. So we have a tactical trade in this space from about 380 to 400. That's about a 5% move. That would be the next leg up. So if this is leg one, today was a bit of a pause. That would be leg two that takes it to 400. So that's the optimistic case. When we look at the 150-day look back, we see that we have these two support levels here that held at 360. And the last time it held support, it got to this price level right here around 385 and paused for a long while before it got the second and third leg up. So we'll see if with this tactical trade can get through 385 and then aim for 400. That's the next leg up. It's had one nice leg up. This would be the second leg. And then the third leg would take it to the top at 430. So that's what we're in right now, is a pretty wide channel from 430 to 360. That's a $70 range. That's about a 20% change in price. The channel width is about 20% from the high to the low. In the sectors today, here's our cut line between pure gains and losses. Only emerging markets were in the green today, and that's just a fraction. The S&P, our baseline, was off 0.23. So that's not much of a give back on after two really strong days in a row. Still, I consider that to be pretty good. It couldn't get through 380 today, so if it gets through 380 tomorrow, that would be a really strong side to the upside. That's the daily high right there. So the S&P was down a quarter. Dow was only down an eighth. The Qs were basically flat. The Russell was the weakest U.S. index at 0.74, and Treasuries were off 1%, still holding above 100. Let's take a look at the weakness in the market. The S&P baseline at 0.23. There's biotech 0.4. The FANGs 0.5. Staples, discretionary, uranium, finance, Bitcoin, materials. That cluster going from 0.6 to 1.13. Both of the lumbers, wood and cut, minus 1.2 and 1.3. You got Mexico, lithium, innovation and genomics, wheat and precious metals, real estate and Ethereum down to minus 2% on that cluster. Clean energy, very weak at 3.25. Marijuana at minus 3.6. Tesla, big Loser today at minus 3.5. It's now under, it's around 240. Buck 50 is the R10. The range stat is about 15 bucks. Coinbase off 2%. U.S. Steel 1.17. Robinhood 0.5. Rivian and Squarespace 0.4. Cliff and Alcoa also slightly underperforming the market. So there's our three metals. U.S. Steel, the weakest of the metals. Alcoa and Cliff in reasonably good shape against the S&P, and they were better than their material sector. Excuse me. Winning positions today. Again, the S&P baseline at 0.23. Commercial real estate and the Aussie dollar basically flat. S&P tech at 0.33, which was better than the NASDAQ tech. So conservative tech was better today. Not surprising. There's Alcoa or Apple and Microsoft both better than the S&P. Brazil agriculture VIX 0.43 to 0.67. Blended commodities, oil exploration, energy, and oil itself, the entire energy complex, 1.8, 1.83, 2, and 2.36. So not surprising that Devon Energy outperforms the energy sector on an up day. That's why we love it. You got Texas Instruments and PayPal, 1.6 and 1.1. NVIDIA, 0.32. Intel at minus 0.22. So there's our three semis. And right now the strength is with Texas Instruments, then NVIDIA, and then Intel. Couple sniper trades today. This is Devon Energy, my go-to guy. Here's the opening range 3 continuation pattern. So we go long, standard risk box, standard exit for about a half. Again, this got volatile and then peaked. The RL10 rolled over across the baby dragon. I just want to get paid. It then falls, continues to fall, breaks the PSAR. So we just get short right there, standard risk box, and now we're heading down. It collapses immediately all the way back to this. There was a support level over here. So by now, at this point right here, with 1 unit of risk, we're holding 1, 2, 3R in hand. So we want to make sure that we keep a hold of that. I take the 1-2 exit because I don't want to give back more than 1R off of the rebound. And shortly thereafter in the next bar, the RL10 peak. So this is an example of a money management risk. I'm holding 3 in hand. It goes an extra one. Now it's 4, and it comes back to 3. Done. There was probably an opportunity in here if I were more aggressive. On this break, you get some consolidation here, and then a continuation. I decided to wait for the PSAR flip, and then use that as my risk box. Checker hold. This was about a 1, 2, 3 exit. So what I want to zoom in and show you on that is so this is early stages in this trade. So here's the PSAR flip. So I just get long and then instantly put that wrist box on. It was white knuckling it here, and then the RL10 wiggle occurs. So I said, well, let me hold it. So now I finally white knuckling it, get back to break even. Then it runs up to here and starts rolling over. PSAR flips, and I felt I stayed too long on this one. I think like I could have gotten out here and then re-entered. You know, half the time I'd probably do that. But the re-entry would have been key at the same level. So by this time, I didn't want to give, but like I didn't want this to come all the way back down to here to the PSAR where I scratch. So a 1, 2, 3 exit is enough. So I can cash one for the 1 unit of risk. So that's a money management stop again. By the same token, so it holds support at the PSAR. The RL10 rolls over, crosses the baby dragon, enters the dragon, crosses the spine, leaves the dragon. An emerging dragon entry would have been about here. I decided to wait for the PSAR flip to go long. And now what I'm looking at are these two support levels. There's this one, which is the same as the previous dragon. And then the peak of the RL10 here. So it's got to get above this price level really before I'm thinking about a second position. So from my entry, it has two resistances to get through. So this is really just a tactical trade in here, by which I mean it hasn't proven anything yet. There's just the hint of a move happening. And my job is to get, if my risk box is probably going to be something like that, I got to get my risk above the entry level as soon as I can. I got to get my stop above that entry up into about here so that I can lock in that little piece right there. So that is my job, is the once I've got the entry and I've established my stop, my next job is how fast can I get into the money. Check or hold. And nothing much happened that whole time. It was just kind of grinding. Never really threatened the PSAR. So in one mentality, if I just kind of use the PSAR as the guide, this period in here is like a time series. And then by the time I get the 1, 2, 3 PSAR dots above the entry, the Wu-Wei exit would simply say, look, leave that in place here, and then on the fourth dot, move it to here, and keep it there, or trail it with the PSAR like that. In this case, I think I would have preferred having the PSAR as my stop. It never really threatened when you look at the bottom, so there was that much buffer. Half the time, I would be taking that. And I don't mind that trade right there if you just took a 1, 2, 3 exit, which is essentially the same idea as this one. I was hypnotized by these rising lows. And when this happened, I was ready to pull the trigger here in a second anyway. It recovered nicely. Now, I said, hey, I got lucky here that it didn't get hit. Maybe instead of having my stop here, maybe on this last little move up, maybe I can move my stop to here, to the top of the dragon. and lock in that extra piece. That's not crazy. So if you're holding this trade now, and this is the posture, reasonable stops would be like the 1 bar low, 2 bar low, which is the spine of the dragon, bottom of the dragon, or the PSAR. I would see 1, 2, 3, or 4, and you know that your price right now is like here. So if that's the 0 line, would you just cash it right now at 0, or would you put your stops at 1, 2, 3, or 4? Go ahead, record that over on the in the chat. Where would you put it? I see a vote for 2. I see a vote for 1. 2 votes and 2 votes. Yeah, I mean, another way to look at it is here's my 1 unit of risk. 1 unit of reward is probably up around 4. So 4 would be just locking in +1. But from the top, you'd have given back a full R if you let it fall all the way to 4. So I could live with 2. I think I kept it with 2. So if you opt for 2, which is that 2 bar, that's almost like a little shelf right there at the spine of the dragon. In about 1, 2, 3, 4 bars, that PSAR is going to be up to there anyway. So now you're giving it 4 bars to fish or cut bait. So I think that's a reasonable framing right there. And that's where it hit. So if you were in 2, if you did pick 2, you end up getting hit on that. If you were a person that was trailing the PSAR, you get out there anyway. Or if you were the bottom of the dragon kind of guy, you get out there. So that looks like a reasonable approach to me. And this is about another +1 move, check or hold. What would we call that entry right there? I think that's a Kata 2. Because you have all these rising lows. Standard risk box. And I wouldn't be offended if you used the price bottom right here and really just you were going to execute right here. Or because to me, if it breaks through there, you have enough signal that the downside is happening. You don't have to endure this whole extra piece of suffering here. That's not additional information. In fact, if you were even thinking about going short, if it violated like right here, like if that fell right through here, I don't know if I don't mind being short right there, because it had this much time to go north and it didn't. And if you can get short here, you have a price target over here. So you could be short here and then try to capture that move. And then if that breaks, your next target is down here at the base. So target 1 and target 2 are both reasonable. So if you got short right here and your standard risk box was like that, you'd have probably a 3-to-1 trade frame just to get back to there. That wouldn't be crazy. So this is an interesting moment right here. So I've got my entry. I saw the PSAR flip happen right here. We talked about maybe I get short there. Maybe that's my action. And then that's the 1R loss. So now you have this nice move all the way up, a brief pullback, couldn't even get into the dragon, and now it just resumed. And the important thing here is that it just broke to a new high. And you're holding +1. So where do you draw your stop? 1 bar low. Whoops, let me make that in red, sorry. 1 bar low, 2 bar low, PSAR and belly of the dragon, no lose plus dinner for 2. 1, 2, 3, or 4. And then do you just go ahead and put a second position on now that it's cleared all this stuff and you got 1R in hand? And if you had a nice tight stop at 1, why not put a second position on? Because you're only risking a very small fraction. Would you put a second position on? Could. It's not quite 2R in hand, but, you know, I didn't. It rolled over and hit the PSAR, took my 1 and went home. So that was a couple R on that one. This is U.S. Steel, 3 minute. This one featured, here's the close, here's the gap down, there's the OR3, it breaks out. So I'm hoping to capture the move from the entry to close the gap. And there's my standard risk. Instant loss. I then take the, I notice the RL10 rolls over. This would have been a re-entry on a 1, 2, 3 right where I got long the last time. I decided to wait instead for the PSAR flip with the standard risk box. So this one is -1. It immediately sells off for another -1. Now I'm holding -2. Now I'm mad that I didn't take the entry here because then I could have at least scratched. Dummy. So we're at -2 right now. Fortunately, that's a stop and reverse with the standard risk box. This is where I want you to notice these. I'm going to zoom in on that one. Well, Gary, I practice getting in the zero state all the time. I lose 1R all the time. I'm not surprised when that happens. It just makes me mad, and that makes me more committed to trading well. That's my zero. My zero state's not the absence of emotion. It turns me into a maniac Wolverine of a trader, just committed to doing the right thing. If the expected state is that I'm going to lose 1R, and it happens, that shouldn't move me out of my zero state. That should just confirm that I was right. Yep, I'm going to lose 1R in this trade again. As soon as I put the trade on, I feel the feeling of losing 1R and being a dummy again. And then if I don't lose 1R, it's just better than that. I already know what the worst feeling is. I have the worst feeling all the time as soon as I put the trade on. That's the worst I'm ever going to feel in that trade. Because I'm not going to hang around longer than 1R. then I'd really be angry. So I've already felt the worst I'm ever going to feel in that trade. It only gets better. So that's for me the zero state, is just living with that constant suffering of every time I put a trade on, I just lost my bet, and then maybe I get something back. So this long fails, that long fails, so that's a stop and reverse, standard risk. Now, what I want you to notice is that where it held support last time is where this thing was trying to hold support again. And when that failed big, notice what happens to that RL10. That little RL10 wiggle, and this right here, that's a collapsing dragon right there. So if you were ever going to put a second position on, that's where you would do it, at the confirmation of the failure, and you've already got some money in hand. Not a bad place to put a second position. New low of the day, somewhere around in here. So now we got 1 unit of risk here. We're holding 1, 2, about 2R. Now it bottoms out. The RL10 reverses. Here's a little wiggle to the upside. Hits the PSAR, so I'm out at a +2 and -1 and -1. So now we're scratch for the day. On that trade, I mean scratch for the series. That's a stop and reverse, because what would we call that entry? Harsh sell-off. RL10 bottoms out, reverses, crosses the PSAR, drop a standard risk box on it, SSC, all day. What would we call that exit? Standard. I would also call it correct. What would you call that entry? Kata 2. Here's where I'm going to draw my price targets that would not be irrational. Right? Where am I going to draw the line? Peak of the dragon, peak of the RL10, previous close, that's the gap right there. So target 1, 2, and 3. So if my entry is here, to me, level 2 is sort of like that's a new high of the day. So I see all this as the tactical space. And again, in the tactical space, my only job is to get out of danger and lock in some kind of entry, some kind of no lose plus dinner for 2, so somewhere around in here. And then if it actually does get above like a new high of the day, this is about where I can think about having a second position. And then maybe a third position up here if it can get above that peak. Check or hold. Or I could just lose a half an hour quickly. That's even easier. Then what would I call this re-entry? Yeah, I would consider it a kata 2. It's happening right at like the almost at the ED, at the emerging dragon as well. So all those previous price bar, they're still there. This was just a preservation so that I wouldn't have to let it come all the way back here to discover, or even take the full 1 hour loss. Now it turns out I wouldn't have. Yeah, you don't know that in the moment, so better to just be done with it. Re-entry caught it too. Does that feel correct? Well behaved? Notice how this thing collapses, like right where it's supposed to. And that when it collapses after this long quietude, the collapse is big, all the way down to here immediately. So if you don't respect that exit on the PSAR, then you're just going to eat a loss in 2 bars that wipes out all of those gains. That's why that exit is important. And it's going into the close of the day anyway. So that's what happens when guys are trying to hold on as long as they can, then they don't want to carry overnight risk. So a bunch of guys that were holding and hoping, I'll say, yep, time to exit the position so the selling takes over. Crunch. That's why that last half hour of the day is so wacky. Here's Agnieszka. Working on the whoops, sorry. Exploded the chat box. Come on, dummy. She gets the Z3 breakout, quick scratch, collapsing dragon short, makes a fraction, does a quick try, but it fails, so quick scratch, short 0.8, short 1.7, short loses 0.4, a quiet 2.5. Pretty nice. Well, let's see what Tim's got here. E-minis on the 3. U.S. market opening here. Here's the quick gap up. Hits the VWAP and out for a quick hit of 0.3. The VWAP rejection, beautiful. Recovers, starts making another run. The VWAP rejection again. This was probably a bad fill. We'd like to maybe scratch that if we could. Nice PSAR flip. It ran down and ran up, so he cashed a quick win, but the re-entry had to happen. And then the re-entry does happen too late. Quick hit. Tries the PSAR flip. I feel like he saw the missed opportunity and wanted to hurry up and get back in. Takes a quick loss. Failure to fail further. Exit, gets long, now gets paid. Short This should be a stop and reverse. Net -1. Still was having trouble with the cutting them sooner. I feel like you started getting agitated in here. Keep refining. Um, all right, so he's trying the Aussie dollar. Now he's working on the threes. Now he's only doing the CD, so he doesn't take the PSAR flip. That's a natural short right there. And then the VWAP collapse, another short. He does take the collapsing dragon off of this one and gets paid in here. He's taken half a position at one, and the second half a little bit of a rebound, so still pretty good. This, I think. Oh no, he was looking at a potential stop and reverse to here. His question was, would I consider this a CD for leg in 1-2? No. That's such a minor move. I look at here's the move, and that's the bottom of that move. That's the collapsing dragon right there. This is like a pocket entry short. This is like a kata 2, because what you had was a high, a low, a lower high, and then you get the RLXD. That's a kata 2 short, but the real collapse. This is the real collapse. He scratches. I would be short here because it did not go to the VWAP, and there's a collapse with a exit here. This is more, again, that's more like a kata 2. I think the collapsing dragon is here. That's reasonable. So he makes total of 1.3 for the day. Still pretty good work. It feels to me like the 3 minutes is better suited for you. And I want you to start marking up your charts to look for those SSCs and kata 2s. You need to start seeing all of the patterns. Even if you're just paper trading the CD just to see what it'll do, you should still mark up the other ones so you get to see all of the elements of the play. This is now he's trying the Qs on the 1 minute, and again, I still think, I will say again, that's too quick. I would do the threes so you don't get burned out. Collapsing dragon for sure. Wants to get paid. Re-entry, gets paid. That's fine. There's your kata. There's your SSC. That whole trade. So from 276 to 280 on about a 50-cent risk. That's about a 6R trade right there from here to here. That's about 6R. So 1.1 out of the Qs. Starting to improve there. Good. My brother. PayPal, 42 cents. Position size is 200. So he's risking about 80 bucks. 84, as you can see. He grosses 1480, nets 1430. It's pretty good shooting, Tex. Here is the kata 2 breakdown short to our battle drill covers. VWAP reverse. He gets, I think that was a little early, But he sees the kata 2 pattern, so he front runs it a little bit. Because he gets his second position here, he doesn't have to get it there, so he's got, at this point, he doesn't add a third position. He's just got a really favorable price on the second one. This one's 2R battle drill. He executes according to the plan, and really, it's just starting to move up anyway, and there's the R10 wiggle. Here's the 2R battle drill off of that one, so he gets long there. It doesn't get all the way, here it rolls over, and as it crosses through the baby dragon, he says, you know what, I've got 1, 2, 3, 4 positions on. Get out, PSR flip, get long. So he makes $1,400 on an $80 risk on 18R. Can live with that. Here's Les with the kiwi on the 3s. Long, and where's his cover? Somewhere up in here. Quick scratch. Short here on the PSR flip. Makes 1.5 to cover that loss of a 0.5. Makes 1. Oh. PSR flip. Z3 breakout. Oh. My goodness. If that's your standard risk, and if you trade the Z3 breakout, and then here's your PSR flip to get short. Practice trading when you're uncomfortable, with extra special attention to the rigorous following of rules. Trade your discomfort for increased attention to detail and execution under pressure. Devon Energy, some chop, missed the short. It was after a 2R move he finally gets short. Stops trading at the time. Again, you're supposed to tell us when you stop trading so that we can get those. So scratch and Devon. Tesla crushes it to the short side. Well done. For 1.9R. 2R for the set. XRP. Beautiful short. That's your collapsing dragon. When that collapses, PSR flips. Crush it. Short doesn't work. And again, you're supposed to tell us. Oh, golly. Second position. Oh. 4.5 for the day. Pretty good shooting. Report set. Bearish normal. Looking pretty, a little healthier than it was last week when it was all down here. So we're starting to see a little hope. Still poised at a compound critical state for the risk Z. Still telling us a large move in either direction is possible. Still some warnings on the dead cat bounces. United Health, Merck. But now notice that the min pains are including Microsoft and IBM. And the Dow, so we're starting to see that shift back towards tech. Tesla still has a lot of ground to make up, as does Coca-Cola. Dow Tacticals, still plenty of auto framers, handful of dojis, dead cat bounce warnings in the OR short. One breakdown today in Tesla. Probably a good time to buy Tesla. In the ETFs, kind of similar conditions. Handful of dojis, lots of warnings about critical state. You know, we've had such a horrible sell off, and here was a two really good days up and then a little day of a pause. That's probably just enough of a rebound to bring the sharks in that want to pound this thing short. So there will be some tactical players getting short at the low of the day, and then big time shorts if that swing low breaks. So that's what the downside can look like. The upside is just a continuation, and there's plenty of targets that have favorable reward to risk for that. Look at the snipers here. Oh, sorry about that. I will clean up that snapshot of the Godzillas, but you'll see you got plenty of 1 day movers in here. At better than 2 to 1 sigma on the daily move. On the NDX, a lot more in the spring now because we've had 2.5 days of recovery. Johnson and Johnson and Merck leading the way in the pharmaceuticals. XLV is your healthcare. That's where that strength is coming from. Merck and Johnson and Johnson. In our tactical symbol set, I like Texas Instruments here because of the double plus volatility. I'm interested in wheat and precious metals because it's been so volatile 5 days, but today was remarkably quiet. Brazil, to me, superbly positioned for continuation to the upside. To me, the easiest play for me, the continuations in Devon Energy, and then the metals, and I'm going to be stalking Tesla hard tomorrow. I don't think that's going to maintain. I think people are looking at this a buy on dip. I know I am. Apple with some strength in spite of his previous weakness. Microsoft is probably a little stronger than Apple right now. But to me, it's energy. Devon Energy, those. Plus Chevron's pretty good. I think that's everything I want to cover tonight. Yep, that's everything we'll cover tonight. We'll get ready for tomorrow. Should be fireworks tomorrow. A nice Thursday. 2 days of trading this week. I'm expecting another really strong move over these next 2 days. Perfect trading weather. All right. Take good care, fellas, and we shall see you. 18R to my brother. Well done, sir. I'm going to show that one on Monday and Tuesday, I think, on the two podcasts if I get a chance to. I got to be very
awesome. You want a video of it?
Second podcast.
Because I go through I do a little on my YouTube channel.